I think one of the stocks that is definitely having a great morning is Muthoot Finance, arguably the winner of the earnings season, as the company has posted stellar numbers. Hersh joining in on what has worked for Muthoot.
Well, zone of its own, frankly, for Q1 FY26, where Muthoot's numbers are concerned. And what's led to this beat? One, your margins, both on a QoQ as well as on a YoY basis, have gone up, and that has aided the numbers. But not just that, they've clocked a 37% AUM growth on a console level, 40% where gold loans is concerned. So that's the other piece that stood out. Operating efficiency also playing out. Your OPEX to top line, OPEX to assets, both have moderated, and that has aided the numbers. You've got credit costs which are controlled. In fact, they've fallen both QoQ as well as YoY. And then you have ROAs which are, wait for it, 7% plus in Q1 of FY26. So a standout set of numbers where Q1 is concerned. Of course, sustainability to be watched out for. Let's look at the standalone numbers in themselves. You look at the way NI has gone up 20% QoQ, 51% YoY, aided by interest expense going up in moderation compared to the interest income. So that one, in terms of the bump up, has been lower, and that's what's driving this number here. Thereafter, you look at operating profit, therefore supporting all of the metrics, and thereafter you look at provisioning, which has come down, which is aiding that PAT line over there. 90% growth where profit after tax is concerned. What you also want to look at is some of the key metrics. Look at the ROAs, they've inched higher, margins giving you that picture, and the advances yield has also inched higher, which has aided the margin number. So broadly, that's what's really playing out. You also have interest expenses to assets, that's interest expenses to assets, which is typically your cost of funds, and your OPEX to assets. Look at the moderation in OPEX to assets. That's the operating efficiency playing out. And then you have your NPA ratios, which have come off. All of those numbers looking good. That's your growth number, 10% sequential, really very little to complain about when you've got that kind of a number. So what's leading to the beat? One, higher yields, lower cost of funds, lower OPEX to assets, just kind of squeezing all of that together. You've got stellar growth and lower credit cost, all of that aiding the numbers.